G'day everyone, welcome to this weekend general update for the 16th and 17th of March. And markets just keep marching on. The US market advanced again during last week, and whilst we had a bit of volatility in our market on Thursday to the downside, it reversed it and more than that on Friday in a quite a spectacular finish in the last 30 minutes. It was almost panic buying, and big volumes going through as well. So not quite sure what to expect on Monday because there wasn't any follow through in the US on Friday night. There weren't any major announcements. So I'm not really sure what that buying surge was all about in Australia. If it had just been the major stocks, then I could have thought it was some perhaps futures or options related activity, but it was evident across a huge number of stocks. I look through hundreds of stocks every time I go through the market, and this was small caps, it was mid cap stocks, it was big stocks, it was gold stocks that have been out of favour. It was non-resource stocks. It was just across the board. There was just massive buying, and yeah, so we'll have to wait and see what happens on Monday. So let's have a quick look at the action from last week. This is the normal licensing and general advice information. So on the week, the S&P gained 10 points and just keeps working its way higher. It's within this resistance zone, as we'll see in a minute when we look at the chart. And it's getting towards the top of that resistance zone, but look, there's really no evidence of any sort of significant retracement at this stage. That's not to say that it won't happen, but there's really no evidence of it at this point in time. The ASX lost just 3 points on the week, with a pretty sharp decline on Thursday, but then an equally sharp rebound on Friday. And that large volatility is often indicative of tops in the market. So we're not seeing that in the US, we're not seeing that volatility, but we're certainly seeing it in the Australian market. So there's a bit of a preparedness to take profit on some of these major stocks. But perhaps that volatility in the Australian market is really a reflection of the fact that our index is just so heavily influenced by about 6 or 8 stocks, whereas in America it's far, far more broadly based. And the other point that I want to make too, which is really relevant and may set up some opportunities for the near term, is that contrarian trading from extremes has worked extremely well in the last 12 months. We've seen the banks initially start surging at a time when everyone was incredibly negative on everything, including banks, back in the middle of last year, and that was the time when banks started a massive run. We've seen media companies, after about 4 or 5 years of heading down, got to an extreme and then turned around, and media companies have regained considerably. We've seen steel stocks like BlueScope Steel have recovered very, very significantly in the last 3 to 4 months, seemingly from a point where nobody wanted to know about them. Just in the last couple of weeks, we've seen a big upturn in retailers. JB Hi-Fi, Harvey Norman, David Jones, all turned up very, very strongly from a point where everyone thought that they were basically going out of business. So we've got a couple of contrarian situations at the moment that have reached, I think, an extreme. Certainly gold stocks are at that point where they're an extreme, and there's some signs that it's starting to turn up. We don't really have confirmation on that yet, but it's not bad. But we did get confirmation on Friday that maybe the iron ore stocks have been sold down too heavily. We saw some very sharp moves down in all the iron ore stocks during the last week or two as iron ore came off, and it certainly reached a short-term extreme. So I think there might be a good bounce perhaps in the iron ore stocks. Whether it's actually reached the bottom as an extreme, I'm not sure yet. That's why I think at this stage I'm probably prepared to back that we'll see a short-term bounce from extreme, but it could still head lower yet. Now gold gained $14 on the week, and certainly gold looks as though the 1550 level is held now and turning higher. There is resistance at 1620, so we need to get up above that. But the stock indices are showing some signs of improvement, so definitely some better signs there. Copper hasn't really done much, still hanging around the 352 level, and oil similarly is just in the low $90 area. This is the 6-month chart on copper, so you can see it has really been fairly steady for about the last month now. So let's jump over and have a look at, sorry, just get the right screen up. So we'll look at the S&P 500 to start with. Now we'll just pan back and take a look at the bigger picture. Not a lot has changed since we've been monitoring this over the last 6 months or so. You can see we had a resistance level here about 1440. The price got a little bit above it, dipped, came back, spent a bit of time around that level, and then moved on to the next resistance level at around 1520. It pulled back a little bit from that level, as you can see. We had one day above it and then an abrupt turnaround, so that looked like we would get a correction, but it only went 3 or 4 days to the downside and then abruptly turned back up again, and it couldn't even make it down to these old tops, which would have been a logical minor support point here at around about 1465. Couldn't even get down there. The buying momentum is so strong, and it's just basically gone up again. Now you can see that the daily ranges are really quite small, and we're not seeing the sort of wild swings that you tend to get when we're getting to a top. It's really getting less and less volatile, if anything. So around about this 1575 is the all-time high, so that's another area of resistance, and we've been up as high as 1563 during the week. So we've got maybe another 10 or 12 points from here up to that resistance before we're likely to see a bit of a turn down. The market is on the RSI, it is a bit overbought, but it can stay up there and continue rising for some time. Now the other index that's of course really important for us is the Shanghai Composite Index. It had been performing terribly since the highs which were formed back in August of 2009. It had been pretty much a one-way trend to the downside, but you can see eventually it got down to a point where it was clearly oversold and made a very rapid recovery from around 1950, got up to 2450. Now we've had a little bit of a pullback. It's pulled back to the 38.2% level, so it'll be interesting to see what happens from here. This is an ABC 3-step pattern to the downside, so it could be that the correction in the Chinese market has played out now. And let's just have a look at the UK market. This is the FTSE 100, and you can see, despite the fact that the UK is in recession and really in a lot of trouble, it's just had an amazing run and is not very far off the all-time highs. So quite extraordinary. In fact, the FTSE market is closer to its all-time highs than the Australian market is, which really makes absolutely no sense at all. And that's why charting and looking at the patterns is just so important, because often the fundamentals just do not play out in the market at all. Now the US dollar index is still basically in this range between 78 and about 84. We're in the upper half of that range at the moment. It did get overbought, so we're getting a little bit of a pullback, and of course the pullback in the dollar index is good for stocks and good for gold. Now the Aussie index, you can see we had this sharp dip, particularly on Thursday, which seemed to come out of nowhere, but then we got this massive turnaround on Friday. Quite an extraordinary turnaround. And as you'll see with, I'll have a look at BHP and Rio, you'll see the volumes really quite elevated as well, and a lot of that buying came in the last 30 minutes to an hour. Have a look at the relative comparison. of the sectors on the Australian market. There's no change here. In fact, if anything, healthcare stocks are accelerating away their lead. That's the green line at the top. Banks are staying with them. So that gap between the banks and healthcare is staying about the same. Telecoms has flattened out a bit, and that's because Telstra's had its run and is just consolidating. We've got energy not doing too badly. Materials still a bit of a disaster area, and that's really the contrarian play that I'm talking about with the iron ore stocks. And the small ordinaries really haven't got into gear either, so they haven't really joined in this rally. And I think that is yet to come, and I think that will be a feature of trading in 2013 with the small caps really starting to join in. However, that's a general index. I can tell you that some of the small caps that we've been trading have done brilliantly well. We've had small caps that have gone up, good quality stocks for between 50 and 100% in the last 6 months or so. So whilst the index is lagging, there's been some very specific terrific opportunities in that sector. Now let's just have a look at BHP and Rio, the finish on Friday. You can see BHP has been tracking upwards in a channel. We had a sharp sell-off down to support on Thursday, and then an abrupt turnaround, and the volume definitely picked up on Friday. Same thing with Rio, got down to a clear support level, gapped down on the open, but then traded higher all day, and the volume was pretty useful. That volume response on Friday is far more amplified in a lot of the small and mid-cap stocks as well, but there was literally hundreds of them that did that. Let's have a quick look at gold. So you can see we've certainly in the last 5 or 6 sessions there's a bit of a drift upwards from around the 1565 area up to close to 1600. And if we take a look at gold on a weekly chart, you can see this key 1550 level continues to hold. It's looking a little bit better. I mean, it's not brilliant yet, but we've got to get above this level here. So I'll close. Sorry, it'd be easier to see this on a daily chart. We've got to get above this level here to indicate that we've got some more upside in gold. So around about the 1616 level. So if we can close above there, or say 1625, then we get up above this level as well. Then I think we're in much better shape with gold. And ultimately, I'll feel really comfortable once we're up above around about the 1680 mark. Once we can break this down sloping trend line, around about 1670. By the time we get there, in fact, it might even be a little bit lower. By the time we get there, a close above 1660 will probably be good enough. And then I think we're definitely underway with gold. But as I've pointed out numerous occasions before, gold stocks will generally tend to move before gold does. And whilst it's still only preliminary, this really is looking like a bit of a base here, and I really think the odds are that we're going to start to head to the upside. That's the GDX index, which is the major gold stocks in America. But this is the GDXJ, so these are the juniors. And you can see how we've got very obvious divergence here. The RSI is forming higher lows and higher highs. So the RSI has definitely turned. But at the same time, the price was forming lower lows and lower highs. So that divergence is often the precursor to a sustained move to the upside. And we've now got slightly higher highs on the juniors. Now the fact that the juniors are outperforming is a really good sign. So this chart, more than any, really I think is one of the best signs that we've got. You can see here when there was a sharp uptick on the 6th of March, it was also accompanied by nearly a doubling of the normal volume. I believe this was the turning point on the 6th of March in gold stocks. We need confirmation. We need to move a little bit higher yet but I think we're there, and you can see on Friday night as well, pretty good volume coming in with that rise on Friday night. So that's it for this week. As I said, the move in the last hour in the Australian market on Friday was quite sensational, and it really looked like a buying panic in the end. So I'll be very interested to see how our market performs on Monday and Tuesday next week. So that's it for now. Talk to you next weekend. Cheers.